Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. The last year or so has been a fickle time to be a gold miner. Uncertainty in global financial markets saw the price for the precious metal climb, passing the $2,000 per ounce mark to hit a new record. And with it, the value of companies that mine gold rose as well. But both the gold price and the share prices of the miners have come back a bit now. The past year has taught us one thing: the importance of gold during times of financial crisis. It also showed just how efficient modern mining companies are at removing it from the ground. One of the bigger Australian gold miners is Evolution Mining. The executive chair of Evolution is Jake Klein, and I'm pleased to say he's my guest today. Jake, welcome to Fear and Greed.
Thanks, Sean. Great to be here with you.
Take me through the Evolution Mining story. It's relatively young, but for those listeners who don't know it, it sits next to companies like Crown Resorts and Boral. It's that size of company. It's just because it's in gold mining, we probably hear a little bit less about it. So give me the story about it.
Sure. Well, we started up about 10 years ago. We're coming up for our 10th year anniversary. And we started really with a shell company with a vision that we believed that in the early 2000s, Australia was a strategically important place for all major global gold mining companies. But when the gold price turned in 2012 and came off quite a lot, they decided that Australia was not a strategically important place and started divesting. And Australia had really lost its core group of gold companies that it had previously had. So we set about trying to establish ourselves as a company with a difference, one that focused on value over volume and margins over volume, and one where really prioritized the allocation of capital being the key differentiator for us. So that's what we've done over the last 10 years. We recognize that we're in a very cyclical business. So the key to that, if you're going to allocate your capital wisely, is to do it in a counter-cyclical manner.
Okay, so that sounds like when you got involved with your first asset, Mount Carlton in North Queensland, that was a counter-cyclical move?
It was. So Mount Carlton is a refractory ore deposit, which means that it requires a fairly capital-intensive process to produce gold on site, which is additional to what most gold deposits in Australia require, which are non-refractory. So when the feasibility study was done, which we weren't involved in for Mount Carlton, the study found that it was uneconomic to develop because it was too capital intensive. In my previous experience, I'd built and operated gold mines in China and built Sino Gold into what turned out to be the largest foreign gold producer in China. It was sold in 2010, and the Mount Carlton opportunity came up, and what we saw was an arbitrage in that you could produce a concentrate on site at Mount Carlton and then ship it to China and process it there, just like a copper concentrate. So that was a key differentiator for the development of Mount Carlton, and it turned it from being an uneconomic deposit into one which has evolved into a very successful development, produced significant amounts of cash flow, and has been very successful.
Okay, now you're going to have to dumb it down for me, Jake, because when we talk about gold and, I often report the idea of the cost of production per ounce. And for someone like me, is there a cost of production per ounce, which I can then compare to the sale price of gold, and that's your profit margin? Does it work that way?
It's a little more complicated than that, and I think
I was scared you were going to say that, Jake.
Yeah, the gold industry hasn't done a great job at explaining itself, I don't think. So let me give it a try.
Righto.
You have operating costs, which are really just to produce an ounce of gold. But then there are sustaining costs, and those are things to replace your equipment. Your equipment requires regular maintenance, regular replacement, and that's what we call all-in sustaining cost, which is a better measure to measure, how much is it going to cost to sustain your production. And then there's growth capital, and that takes you to all-in cost. And I guess, the best measure I would say is for investors is to look at all-in sustaining cost. Mm-hmm. And that should give you a measure relative to the gold price of the real margin. And then how much is the company investing in growth in gold production, and make sure that additional growth, that major capital, is really for growth in production. Again, we haven't been great as a sector at ensuring that does actually deliver growth. But ultimately, my best advice to investors listening to your podcast would be to think of a gold company as no different from any other company. What return on capital is the company generating? And given that a gold mine is not a risk-free investment, it ought to be making a risk-weighted return on capital, and that return should not be reliant or dependent on the gold price going up. At Evolution, we've driven our strategy to ensure that we are profitable and we prosper through the cycle. So in times like today, when the gold price is above 2,300 Australian dollars an ounce, which is a great price, we're making great profits. And in times when it goes backwards and is lower, we can still prosper through that cycle and make appropriate returns. So I would encourage people to look at it as no different to any other business.
Okay, your all-in sustaining cost is about $1,100, is that right, an ounce?
That's right. A little higher. It's closer to 1,200.
Okay, but you're a relatively efficient gold miner on an Australian scale, aren't you?
We'd be amongst the most efficient in the world in terms of that measure, the all-in sustaining cost measure, and on return on capital measure.
Okay. Now, I want to talk about where you invest, because we think of Australia as a great country with gold mines. Now, you've invested in Ontario and Canada as well. Recently, there's been a bit of news out of Congo and Ghana, and some of your competitors have had struggles there in terms of government regulations, and in fact, in one case, literally closed down or retracted the license in Ghana, I think that was. Do you prefer to invest in countries like Australia and Canada, where there's fairly established rule of law and judicial system and governments, versus those African nations which they sound exotic and it just seems there's a lot of opportunity there, but you have stayed away from that?
We have, and that's been a very purposeful part of our strategy, Sean. If you go back 15 years ago, I thought that China was a great place to invest, and we were very successful there. But if you think about the geopolitics in the world over the last decade, in my view, China has become more assertive, and its strategy is to be more expansive in resource-rich countries, and particularly developing countries. I think it's got to a point where it's recognized that it won't be able to own assets in Australia of significance and size. So it is and has been and has had a very premeditated strategy of looking to developing countries. So at the same time, as its government has focused on those countries, it has also grown what you describe as national champions who are endorsed by the government and who have become very competitive. So if you go to Africa, it's very different to if you'd gone there 15 years ago as an Australian company. In today's environment in Africa, you're likely to find Chinese corporate competitors who have significant Chinese government support over there.
Right.
And nationalism, resource nationalism, these increases in prices, generally countries have felt that they haven't really got the benefits of what they should have got from foreign investment in their countries. So you've got this increased geopolitical risk. And that's been why we've focused on Australia and Canada. Rule of law can be relied on, great mining skills in the country, and very attractive geology.
Okay. So the mines you have in Western Australia, Queensland, New South Wales, and then Ontario, how difficult is it running a company where your assets are so far apart? I mean, Canada to Western Australia is a long way away.
Well, let's say that COVID has not made that easier, given restrictions on travel. Again, our thesis and strategy has been focused on the fact that there isn't a great deal of synergy between mines in different locations. Mm-hmm. There is an importance of getting to know the jurisdictions so that you have good understanding of the regulatory framework. And we'd say that 2 jurisdictions are what we can manage as a company of our size. And then it's up to getting terrific teams on site, and then empowering those teams to be successful, giving them a values framework, which we do, but then giving them also authority to deliver the best they can at the site. So we're very much about a devolved model, which empowers the site teams to be really, we call this the general managers of our sites, the CEOs of their business.
Okay, and then you've recently purchased Battle North Gold in Canada. Is that close to your current asset? And will there be economies of scale in that then?
In that case, there will be. It's actually right next door, and the exploration tenements are contiguous to the Red Lake tenements. And there's a mill that is pre-existing, which we intend to use to process it as a single mine. So in that case, Battle North and Red Lake really should have been developed as one mine, and we've now consolidated it so that it can be.
Okay. Stay with me, Jake. We'll be back in a minute. My guest this morning is the Executive Chair of Evolution Mining, Jake Klein. Now, safety is the other big issue in all mining companies. How do you balance the need for low production costs with safety, which is probably your highest priority?
It has to be our highest priority. That and environmental stewardship and ensuring that we don't do environmental damage. But safety, keeping our people safe is our highest priority, and there can never be a debate of production taking priority over safety. So really important to us. One of the things which your listeners may be interested in is that, in fact, the gold mining companies have been able to develop their safety systems to the point where mining is actually safer than a manufacturing plant.
Is that right?
Yeah.
Wow, that's fascinating, actually. And that's just through constant focus on it?
Constant focus, really trying to make safety as personal as possible. The impact which accidents which could occur would have on people's impact on their family, on their hobbies, and trying to make it as a personal journey as possible. That's not to say, and you never are at a point where you can say you have achieved everything you have needed to achieve in safety. It's a continuous effort and focus for us.
Okay, and you mentioned a moment ago the environment. In Australia, particularly Western Australia, there's been some unfortunate examples of the environment suffering as a result of decisions made by miners, obviously not you guys. Is that more relevant now than it's ever been?
Yes. The ESG component of our business is it's a tidal wave, which we're trying as best we can to run in front of it. But institutional investors are becoming increasingly focused on it, as they should be. That goes for us. Our focus is on carbon emissions and also on water usage. I think in Australia, water consumption is going to become increasingly important, and reducing our reliance on fresh water consumption is really, really important for us. The environmental protection and focus on that is also critical. First Nations and Indigenous relationships, really, really important. And of course, the cultural heritage aspect of that is critically important. So the scrutiny and focus which mining companies are coming under is increasing and appropriate.
So where to next for Evolution? What's the next decade look like?
We want to do more of the same. That is, be counter-cyclical, be focused on margin over volume. And if we can deliver to our three core constituencies our ultimate objective, which is to shareholders to make them a superior rate of return through capital growth and dividends, we want every one of our employees to see their time at Evolution as a highlight of their career. And we want the communities in which we operate to be better off, not only during our operation, but after we've finished operating in that community as well. And if we can achieve those things, I think we'll be a great gold company.
Now, Jake, I've left this to the very last question because I'm almost embarrassed to ask it because it's probably very ignorant. How often do you dig a hole and not find gold?
Very often. You need to. Well, you hopefully don't dig the hole before you haven't found the gold. But discovery is best, I suppose. Best analogy is the high-tech industry. Our head of discovery, Glenn Masterman, will tell you that you drill more holes that won't find gold.
Yeah.
But once you do, you can't drill enough because you're onto something that is creating value which wasn't there before.
Is it the natural optimism of a geologist? Isn't that what miners talk about?
I think you need to be, because it's like the technology space. You always hear about these unicorns which are on the front pages of the newspaper, but you don't hear about all the failures.
Yeah, true. Jake, thanks for talking to Fear and Greed.
Pleasure, Sean. Great to be with you.
That was Evolution Mining Executive Chair Jake Klein. This is a Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.